Hey, so we have the CEO of Aurora EOS, which is a block producer coming up now. He's going to talk about social scalability. So welcome, Myles Snider.
Hello, everybody. Cool. So yeah, thanks everybody for coming out. Thank you to Ramon and all the other organizers of this event. So as you guys know, this event is called Scaling Blockchain. And I think when a lot of people think about scalability, they think about a particular aspect of scalability, which is sort of the tech side of scalability. So it's a lot of what Rob talked about, but in general, you'll hear a lot of people talk about things like transactions per second, or throughput, or time to finality, latency, things like that. And all of those are really, really important aspects of scalability, and as Rob showed, EOS really shines in those areas, and that's one of the main reasons why it's been able to be as successful as it has thus far. But I want to talk about another side of scalability that I think people consider less often, but that I consider equally as important, and that's the idea of social scalability. So what is social scalability? Social scalability was first defined by Nick Szabo, who is, he's one of the most OG people in the entire crypto space. He was the inventor of BitGold, one of the predecessors of Bitcoin. Some people think that he may actually be Satoshi. He's the father of smart contracts, all these things. So this guy really knows what he's talking about. So this is kind of a mouthful, but bear with me. Nick defined social scalability as the ability of an institution that is a relationship or shared endeavor in which multiple people repeatedly participate and featuring customs, rules, or other features which constrain or motivate participants' behaviors to overcome shortcomings in human minds and in the motivating or constraining aspects of said institution that limit who or how many can successfully participate. I know that's a lot. You guys should all read the blog post that it comes from, but let's translate. In other words, what Nick is saying is how do we take a network and scale it to millions or even billions of users without having things devolve into chaos? So how do we create structures that allow a network like EOS to onboard the next wave of millions of users without letting sort of disputes and disagreements fracture and destroy the community? How do you make decisions? How do you evolve a network that has participants all over the world and that is not controlled by any one party? And so I'm not just talking about like disputes like the type that go to ECAF. I'm talking about larger disputes like should ECAF even exist? These are major decisions that the community needs to make, and we need to put structures in place that allow us to make those decisions and allow us to evolve the network. And social scalability is intimately related to governance. So again, as Rob mentioned, EOS has a governance structure in place. But where we are right now is that we have a governance structure that's sort of loosely defined. And I'm trying to make the case here that we need to define that governance structure a little more formally and put things in place that can allow us to grow more in the future without some of the complications that we've seen some other projects. So the core question at hand is really, how do we govern EOS? And traditionally, there's been kind of a trade-off with social scalability. When Nick was talking about social scalability in his blog post, he was specifically referring to Bitcoin and Bitcoin's unique feature set and why that allowed it to scale socially. And Nick makes the case that this sort of programmatic, code is law, you know exactly what's going to happen with the protocol allows you to get social scalability without introducing all of the complexities of human relationships. Now, some other projects have noticed some of the problems that the code is law approach has resulted in and have tried to take a different approach to social scalability or to blockchain governance. And some of these projects have taken a more flexible approach that allows for errors to be fixed. But the trade-off there is that you have less strong guarantees about how exactly the protocol functions. So one of the core questions that we want to ask as the EOS community is, can we find somewhere in between those two approaches that really works and allows us to scale socially? So, we can look at the competitive landscape for EOS to learn some lessons. We can learn from some of the past projects like Ethereum and Bitcoin and how those have gone. But we also have to think about some of the other projects that are coming online. Because you have things like Dfinity or like Hashgraph or Tezos, which are smart contract platforms that, in theory, are competitors to EOS. And I think a lot of people have seen EOS as a winner because of the technological scalability side of things. There's more throughput, it's faster, it has lower latency than all of these other projects, and it's going to win as a result. But we're seeing things like Dfinity, which is really going after the scalability game as well, as is Hashgraph. And Tezos is making governance its core focus. And the reason that we want to pay attention to these projects is because EOS can't win on technological scalability alone. If some of these other projects put structures in place that allow them to evolve their governance and evolve their projects without devolving into chaos, then that's an important thing to consider as well, and that could allow them to win and could allow them to outcompete EOS if we don't put these structures in place ourselves. So I want to take a look at two examples from the past because I think it's important to learn from them. So the first, let's look at Bitcoin. So Bitcoin's approach to governance and social scalability is this code is law approach. And in particular, there's no formalized governance structure in place for Bitcoin. So, I would make the case that all blockchains are governed in some way or another. It's just a matter of whether that's formalized, whether that takes place off-chain, or whether it's sort of an ad hoc, peer-to-peer governance like Bitcoin has. And, as a result of the governance structure that Bitcoin has put in place, you see a favor towards the status quo. It's really, really difficult to implement changes in Bitcoin. If you want to implement a change in Bitcoin, well, you kind of have to convince this other group of participants who are spread out all over the world to run the same software, and that's a really big uphill battle. So what we see is that Bitcoin tends to evolve very, very slowly. And some people would say that that's a feature rather than a bug. It kind of depends on your perspective. What you get with something like that is that you have really strong guarantees about how the protocol is going to behave. So if you look at Bitcoin in 2010 versus Bitcoin in 2018, it still behaves in very much the same way. And so for someone who wants to, say, park their wealth in Bitcoin, they have pretty strong guarantees about how Bitcoin looked in the past, how it looks now, and how it's going to look well into the future. On the other hand, you could say that Bitcoin is falling behind in certain aspects because it has not managed to evolve. And that's sort of a trade-off that you take. So a lot of the goal with governance for a project like EOS is to put structures in place that do allow us to change and evolve without too much going wrong. And so it kind of leads us to this question of what happens when things go wrong. And I think that's where we see the limits of the code is law approach. So with Bitcoin, we saw, I think there's two interesting things that we can look at. The first is that there was recently a bug in the core protocol of Bitcoin that would have allowed for a miner to inflate Bitcoin beyond the 21 million Bitcoin limit. And luckily, this bug was caught and patched before it was exploited by any hackers. But I think it would have been really interesting to see, what would have happened if this bug had been exploited? Because the Bitcoin community would have been forced to grapple with this idea of code is law. Do they allow the bug to go through because it was in the code, or do they, hard fork in order to mitigate the effects of such a bug? And then the other thing we saw is the Bitcoin Cash debate. So there was a split in the Bitcoin community about how to scale the blockchain. Should you scale on layers built on top of Bitcoin like Lightning, and that was the Bitcoin Core approach, or should you scale on chain, and that was the Bitcoin Cash approach? And there was no real way to make a decision or to make a compromise within the community because there was no formalized decision-making process there. So we saw a split, and we saw Bitcoin sort of break into two different factions that were each smaller than the group that had existed before. So another really good example is Ethereum. So Ethereum kind of made code is law part of their core ethos at the beginning. If you saw on the Ethereum website around the crowd sale, it said things like build unstoppable decentralized applications, and I think they actually used the language of code is law. But then we saw the Ethereum community kind of come face to face with this issue of can code really be law? And as a result, the governance process of Ethereum has evolved a little bit to include things like voting sort of as a social signal, what Vlad and Vitalik have called loosely coupled governance. But what we've seen is that they've kind of moved away from code is law, but they haven't put a formalized decision-making structure in place, and I would contend that that causes more complications than almost anything. So we have a couple examples. Most of you are probably familiar with the DAO hack. For those that aren't, this was pretty early in Ethereum's life cycle. There was a smart contract that was created that was funded by a bunch of participants with Ether. That smart contract was going to programmatically seed a bunch of projects and then distribute the revenue from those projects to participants in the DAO. So this DAO raised millions of dollars that were held in a smart contract that was ultimately exploited by a hacker who then began to drain the funds from the DAO. So the Ethereum community had to come together and say, okay, is code law or is it not? And ultimately what they decided was that they decided to fork the blockchain to reverse the effects of the attack. And that led us, again, to Ethereum and Ethereum Classic, sort of similar to what we saw in the Bitcoin world. The problem was that it sort of set a precedent that has since caused a lot of confusion. Because we saw last year, there was a multi-sig wallet that was exploited and resulted in almost $400 million worth of Ether being lost by some of the biggest projects that we're building on Ethereum. So a lot of people in the community said, hey, well, we forked for the DAO, we should fork for this as well because it's a really big hack. Well, a lot of other people said, well, you know, the DAO was a very particular situation that called for drastic measures, and we don't want to set a bad precedent. But there was no real consensus within the community about how these things should go. And this isn't going to be the last time that something like this happens in Ethereum. And so one of the interesting things we saw around the time of the DAO hack was that the Ethereum community implemented what's called a carbon vote. So this is an on-chain vote that allows people to vote, to cast a vote using their stake on the blockchain. And the idea behind the carbon vote was that it would serve as sort of a social signal. You could get a bunch of Ethereum holders to cast a vote, say yes or no, we should fork or we shouldn't fork, and you can use that to help the community to decide. It's sort of a way to gauge sentiment. Unfortunately, Ethereum never included voting as part of its core social contract. So this was never really something that people who were participating in Ethereum thought of as part of the governance system. And as a result, we saw super low participation in the carbon vote. In fact, it was only 4.5% of the total supply of Ether that actually cast a vote. And as you guys can see, one voter made up a huge portion of the vote for yes to fork. And so I think that, again, shows that when you don't implement sort of social norms early on, then people tend not to use them and they tend to be ineffective. So what does this mean for EOS? Well, I think there's a few conclusions and sort of learnings we can draw from the past. The first is that there's no real easy answers. You know, none of these projects have quote unquote gotten it right. And I think we as an EOS community are trying to avoid some of the pitfalls of those projects. Two is that when things go wrong, humans inevitably have to step in. So, you know, I personally think that the idea of code is law is really a myth, because even in the systems that have a strict code is law ethos, they end up having to fix them. Because I believe that blockchains are essentially, they are ways of connecting groups of humans. They're another way of organizing human activity, and they attempt to do so in a trust minimized way, but these protocols are made up of humans at the end of the day. And I think the final major takeaway is that without proper systems in place that are set from the beginning, then the network and the community can really fall apart when disagreements happen. So what are the risks for a system that doesn't socially scale? Well, I think we've seen some of these things with Bitcoin and Bitcoin Cash and Ethereum Classic, but we see confusion and chaos from disagreements. Public perception becomes highly skewed. The community fragments and we see forks, and we end up with a number of communities that are actually weaker than the community that existed before that. We discourage new entrants because they're either scared to lose money or scared about what sort of guarantees actually exist for them. And ultimately see the market value fall because investors don't like uncertainty. And these sort of things create a lot of uncertainty. You know, and as we can see with EOS, we've already run into some issues around some of these problems. This is just a collection of some of the headlines that have come out in mainstream crypto media related to some of the core issues that EOS is grappling with right now. And it kind of gets back to some of those things I was saying, like discouraging participation, you know. Some developers may be scared to get involved because they're unsure about what getting involved in EOS actually means for them and for their projects. And they're unsure about what the process looks like to make a decision if something goes wrong with their project. So it's really important to get these things right. So what does EOS governance look like today? Well, it's very much a work in progress. And sort of the core thesis and the core case that I'm trying to make here is that we need to take social scalability and governance as seriously as we're taking technological scalability, because that is a key to the success of EOS as a project. So I kind of divide the EOS governance stack into 4 different layers. The first is stake-weighted voting. So we've got voting for block producers. That exists today, and that's, you know, sort of programmatically determined. Block producers get votes, and the rankings change as a result. Coming soon, we're going to have general voting. So we're going to have the ability to hold a public referendum on-chain where EOS token holders can vote on major decisions to the protocol. And then we also have, in the future, potentially voting for the worker proposal system. So this is a proposed on-chain treasury that would allocate a certain portion of inflation to projects that are voted on by token holders. And the community needs to decide, you know, one, whether or not we want to implement that sort of on-chain treasury, and if we do so, how would it work? The second layer of governance is block producers as elected representatives. So you can sort of think about EOS as like a traditional corporate structure where the token holders are the shareholders and they elect a board of directors to make decisions on their behalf. That board of directors is the block producers. And so we've seen a number of decisions be made by the block producers via 15 out of 21 approval for changes. And this has been really useful in a lot of ways. It's allowed us to scale up. It's allowed us to fix a lot of the issues, sort of address some of the nuances that come with a new blockchain and with growth. But I think it's also really important to define the authority of those block producers. You know, in what situations should a 15 out of 21 vote be sufficient to implement a change? And in what situations do we need to go to public referendum by all token holders? That's a really fine line, and we haven't quite defined it yet. But you can imagine in the future, if a decision needs to be made, and there's not clear guidelines on what type of decision that is, whether it's a public referendum or a block producer decision, then we can see a lot of disagreement and chaos. And then the final part of the governance stack is arbitration. So arbitration is something that's pretty new to blockchains and has been put forth on EOS. But the idea behind that is that you need a way to sort of resolve disputes between people on the blockchain without resorting to the legacy legal system. And what we have right now is we have a temporary constitution that's been implemented that has a party in it called ECAF that is arbitrating on behalf of all EOS token holders. As you can see from some of those headlines, and if you're paying attention closely to what's going on in the community right now, there's a ton of disagreement about whether ECAF should even exist. Where does their perceived authority come from? Are they legitimate? Should block producers listen to the decisions that they make? And furthermore, can something like ECAF ever actually scale up? You know, when we think about how we're going to address these things, we have to think about the social scalability side of things. You could say, well, you know, arbitration is great because we need a way to resolve disputes, but if it's structured like ECAF, where it's a single party with, you know, without legitimate authority, there's no real way to trace where their authority comes from, and there's no checks and balances with regards to their power, then that's going to cause a lot of issues for the community going forward. And so in the next constitution, we're going to be forced to grapple with a lot of these issues. And now that we have the ability to conduct an on-chain referendum, we're finally going to have the ability to actually ratify a constitution, and we need to be thinking about all these things when we do that. So are these processes working? As we go through the EOS governance stack, we can kind of look at what's working and what's not. Well, voting for block producers, that's sort of the core of delegated proof of stake. As I said, that's programmatic, and that seems to be working. But I think a lot of the other stuff really needs to be addressed further, and I think it's one of the most important themes that we're going to see emerge over the next 6 months or so within the EOS community is how do we set governance structures in place that work and that are good and that allow us to scale socially. Because right now we've got a constitution that was not adopted by a public referendum. So in many ways it can't be considered legitimate because it wasn't voted on by token holders. You know, the Constitution was drafted prior to mainnet launch and included, but most token holders didn't even know it existed. And there's a lot of, you know, clauses contained within it that I think are really controversial. And so, you know, there's actually confusion about whether or not this document is even legitimate. There's confusion among block producers about whether they should be bound to the terms that are contained wherein. There's actually, there's things in the Constitution that are totally unenforceable and have been broken, and when you have a document that says, you know, X cannot be done, and then X is done, and it's unenforceable, it tends to undermine the legitimacy of the document as a whole. We've got confusion and disagreement around ECAF. You know, as you guys can probably tell, I think that having an arbitrator at the base layer is a bad idea and is going to prevent us from scaling socially. And you're seeing that now. eCash issued its first decision this week, and it's probably one of the most controversial things to happen within EOS governance since the launch of the mainnet. You know, we're 5 months in and the community is still small, and we're grappling with these issues. Now imagine what it looks like 6 months from now, a year from now, when the community is 5 times as large and we're trying to figure these things out. We have a long way to go in terms of education and in terms of getting the proper tooling in the hands of the community that allow them to participate, to not only participate in a secure way, but to participate in an informed way. And then finally, we have, you know, the referendum software is still in the works, and we haven't actually held a referendum. So we've got, you know, we're still trying to get token holders to know that they should be voting for block producers. And the next step is going to be trying to get them to realize that they not only should be voting for block producers, but also should be participating in public referenda. So there's a lot of work to do. Why is this so important now? So I think I can't stress this enough that EOS is at a really critical stage. You know, one of my favorite entrepreneurs in the space, Eric Voorhees, has said bear markets are for builders. And I love that phrase because I think that when you're in a bear market, it's a really good time to build things and set the stage for a lot of pressure that comes with bull market. When the market goes crazy, a lot of people pile into the community. There's a lot more pressure, there's a lot more talk around price, and it's a lot harder to coordinate. So I feel very lucky that we as the EOS community have this ability to build out this network, build out these structures, and put these things in place when it is a bear market, so that when the time comes and millions and millions more users pile into the EOS ecosystem, we have clear structures in place for how this should evolve. And so the community is still very small, and we can work together. And I think it's very possible to address these issues, but I think people need to take them seriously. I think that, I can't stress enough that the way that we think about technological scaling, we should also be thinking about social scalability. And when we think about the governance structures, we really need to think about not what does this look like today, but what does this look like in a network like EOS that has billions of users all over the world. And so, as I said, I'm the CEO of Aurora EOS. We're a block producer. We're really focused on education, and we're going to be even more focused on governance going forward. I encourage everyone in the community to participate in these discussions. Please ping me if you're interested in having a further conversation about it. And I'm really excited for the next talk that's going to come up, because Marcin is going to talk specifically about how we might be able to resolve some of these issues, and what are the structures we can put in place to make them scale up socially. Thanks a lot, guys.